Well, welcome to another edition of the Independent Solutions Wealth Management Economic Markets Update Call. My name is Drew Miller, and I am Head of Advisory Consulting and Business Development. And today we're going to hear from Chief Investment Officer Dan Neiman about what happened at the end of the third quarter for 2023. So Dan, welcome.
Thanks, Drew. Thanks for having me, and really looking forward to kind of running through not only what we've done, but what we think is going to happen over the next quarter and beyond.
Yeah, that's a great place to start, Dan. Talk a little bit about how the firm ended the third quarter and some of the changes to the investment committee that were recently implemented. Also, if you could touch on how you're positioning the portfolios for the remainder of the year.
Sounds like a loaded question, Drew. It's kind of everything at once, huh? Well, we ended the quarter, from a investment standpoint, the markets came down a bit starting in July. We definitely had, the S&P 500 up pretty good in the first half of the year, and now we've definitely corrected some. And so really our portfolios have been, sort of holding the status quo. We've continued to look at potential rebalances. Obviously, some of the stock portfolios, selling stocks and getting out of some names, try to reposition those into stronger names in a downturn, a little more defensive names, more value names, and moving money sort of out of the growth areas into value where we can. But I think from a change perspective, we've retooled some of the way we're running the investment committee, and also now adding an executive committee on top of the investment committee. The investment committee still contains our portfolio managers, myself, Dave Mariacker, John Thur, as well as our executive committee, which is Glenn Wiggle, Mike Lomas, myself, and Mike Zimmer. So the seven of us comprise a investment committee where we each give our take on what's happening in the markets, what we feel is going to go up, what we feel is going to go down, and I can share some of the comments from our internal investment committee call here in a bit. And then our executive committee really makes decisions globally on our portfolio. So as we buy and sell and take recommendations from the portfolio managers of the individual portfolios, trying to look at what what we feel globally will help our clients at the end of the day. Each client has a risk tolerance. Each client's sat and filled out a risk questionnaire with their advisor. The advisors then put together a potential, sleeve of or mix of portfolios potentially with utilizing our different portfolios. And we are trying, to participate on the upside, but also protect on the downside, and really try to make, clients look at the long-term time horizon for most of their assets. Obviously, some clients have short-term time horizons, but the majority of clients have multiple buckets, and we're trying to make sure that what we do inside of our portfolios doesn't rock the boat, depending on what their bucket is. So when it comes to portfolio changes, we didn't do a whole lot, but we are trying to gear ourselves for a downturn, and we've seen the markets, like I said, slough off a bit from their highs at the end of the second quarter. What else did you ask? That was 2/3 of the question, I believe.
You had mentioned, talking about some of the changes to the investment committee, and you had also mentioned our recent investment committee call. So I think it would be a good time to kind of highlight some of the points that were made by the other members, but also talk about the recent addition to the firm of our new partnership with Alexis Investment Partners and what they bring to the table.
Yeah, that's a great thing to touch on. I know we've put out a few marketing pieces internally to our reps, but one of the things that we decided was important to have, and we've tried to have it ourselves inside of Independent Solutions with our rotation sleeve, a bit of a tactical approach, but that's not really our nature, is to be tactical. We started talking with Jason Brown and his daughter Alexis, who run Alexis Investment Partners, and they have their own ETF called Lexi, named after Alexis. LEXI is the ticker, and Lexi itself is a practical, tactical approach to investing, and we've now asked Jason and Alexis to come up with a sleeve of models that can be put into our sleeve or into our portfolio model selection choices, and we're calling that the practical tactical sleeve. And with the practical tactical sleeve is a much more momentum based tactical approach to investing, but also using the asset allocation theory. So kind of a combination of the two. And we feel it's going to be a good mix and a good blend for those clients that want either that short-term bucket where they want to protect on the downside, or maybe they want to be invested in equities but have that tactical approach to it. So we've come up with 5 different maximum equity positions. So we have the PT 100, the PT 80, the PT 65, PT 50, and PT 25. So those are the maximum equity exposures in the new models. And so clients that want equity exposure can utilize those with our strategic asset allocation models or with our stock models to enhance some of the offerings we have, and also to help us with some downside protection. And we've made this a strategic partnership. So Jason and Alexis are still running their own RIA called Alexis Investment Partners, but we've contracted them to give us the signals to when to invest and when to change the models, and the changes will happen monthly if they're happening. And the asset allocation mix will be ETFs, and that'll also include their ETF. And we feel that's going to be a good partnership. We're going to go ahead and date for a while and see how it works. But I think that they're going to add insight to our investment committee, and they're also going to be able to add obviously the diversification and one of the sleeves or one of the tools in the toolbox that advisors didn't really have at Independent Solutions previously with a tactical approach to investing. When it comes to our investment committee, we did have an internal call last week, and we shot ideas back and forth on what to buy, what to sell, and just a little bit of recap of what happened. John Thur, been a CFA for 40 years, as you all know, and John basically sees interest rates continue to rise, which I think we saw actually happen. So John's pretty spot on, and he said perhaps considerably higher. They may even go even higher in the shorter term, and he thinks that'll be a headwind for both stocks and bonds. He's being very patient. He's holding very short duration fixed income and focusing on equity investments that he's focused on now for quite a while. Strong companies that generate dividends and trade at attractive valuations. So he may hold cash for quite some time if he doesn't see valuations at the levels he wants to be able to buy into those equities. So basically, he's looking to he's looking at the market potentially going down a little further before he goes in more with some of the cash he's holding in client accounts. From Jason and Alexis, they've been buying the dips. So if they've seen the market dip because they're more momentum based, more tactical based, when they see a dip, they've been buying equities, increasing their allocation to certain stocks. They definitely agreed on what types of stocks to be buying. And I can say from my side, as sort of the value dividend guy, I'm fully invested in the dividend models. And again, also doing what Jason talked about, buying the dips, buying stocks when I see them dip, if I really, really like them, and if I really have conviction with those stocks and what their cash flows are and their cash positions are and balance sheets are strong. So I think from that standpoint, John, Jason, Alexis, and their firm, myself, all kind of agreed in buying dividend stocks, buying value stocks when they're dipping so that we can participate on the downside. And then hopefully in the long run, like some of the stocks we've probably bought over the years, participate on the upside as well. Glenn Will expressed very long-term optimism, especially with the adoption of AI. He thinks that's the productivity miracle. He's calling it like the internet of the 90s and the globalization of the 90s. He pointed to example like food services industries and other areas where he thinks robots and AI will help provide faster and reliable service that we can't find from employees today. He's diversified across holdings, so not just focused on one area like, say, technology or focused on one area in particular, but he does see potential near-term negatives, but a lot of potential for long-term investors, those that want to, sort of ride the roller coaster of growth right now to be, to benefit in the long run, right? As stocks go up, he feels as there's consolidation maybe in the industry and certain areas of growth will prosper in this environment and prosper in the AI environment, as he said. And I think that he feels that we do have some legs to run up from these levels, as we talked about last week. So that's the small update from the entire investment committee, I think. We talk sometimes on the investment committee about our strategic asset allocation models. And inside those models, we did one rebalance in the last quarter. Personally, I don't see us doing another rebalance unless we see continued downward market activity. I do think markets will stabilize here as we get towards year end. We've seen a bit of a downward spike in the S&P 500, like I mentioned, since the end of the second quarter. Obviously, there's a lot of volatility out there, and I think that's been a negative effect on the markets.
Well, I think you're right, and I think everyone continues to monitor the market volatility. Rising prices, stubborn inflation, definitely here at home. But, with the horrific events a couple of weeks ago in Israel, now people focusing more on the Middle East, in addition to the war in Ukraine. As we continue to deal with all this uncertainty, what message do you want to relay to the advisors and the clients of our firm?
Well, obviously, horrific events. I hope for a quick and swift end to the conflict in Israel, the war in Israel. Obviously, there's, the potential for that to be drawn out would be horrific, I think, on a global scale. And we don't want to be pushing, it's a real tight area, right? So things happen fast and quick. And I think if the Israelis have their way, that the war will end quickly and swiftly, with the support of, obviously, some of their allies. So from a market standpoint, that's been an effect of the market the past 3 weeks. So I think we've seen that the market went up sort of towards the end of September, kind of hit a bottom, went up a little bit, but then of course that conflict happened and started, not over yet. So now we've seen a downward trajectory. The one thing I do know is once that conflict ends, I think we'll see a big uptick in the market. That'll stabilize the markets when that ends, and things will move up north again. Which would be nice to see. The certain areas, obviously, like defense stocks, oil stocks, some growth stocks. Israel's a huge technology play, and so you'll see some of those areas come back pretty quickly as soon as that happens, as soon as that ends, which it will end. I don't think it's going to be a Ukrainian war. If that is what happens, that's going to be more of a world war situation, I think, than what's happening in Ukraine. So a quick, swift end to the war there would have I think a good impact on the stock market, because some of the major indices are heavily weighted into tech, heavily weighted into some of these areas like oil, and so we're going to see a big swift kick up in the market.
Well, Dan, I know a lot of the advisors that I talk with, and especially their clients, are obviously very concerned about things that are going on in the world, and especially the markets here, domestically. But we do really appreciate you giving your insight onto your thoughts on what you're seeing and what you're going to do from a positioning standpoint for the models and the firm going forward. And, we also appreciate you sharing the thoughts of the investment committee. So we just want to say thank you so much for taking the time today. And we want to thank all of you for joining us today for this third quarter market and economics update call. If you have any questions or would like, any help with anything with the firm, please do not hesitate to reach out, and we will see you on the next call. Have a great day.